Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Becco and my partner, Hari.
Hey, everybody.
How are you, Hari?
I'm doing well.
Yeah?
The world's falling apart financially, which is fantastic. So
that is very timely comment because we are going to talk about how value investors should prepare or act and behave in this kind of environment today. I think this is a very timely topic as I struggle with this, with, headlines flying in saying that the financial market is going to crash, the world is collapsing, et cetera, et cetera. And so how do you control your emotions and how do you prepare yourself and how do you conduct yourself in this market? So that's what we're going to talk about today. So give us a quick disclaimer before we start, Hari.
Yeah, this is a Value Investor TV podcast. We are here to educate you and entertain you on the concepts behind value investing. We're not financial advisors, nor do we know your specific financial situation. So if you have any questions or about that, you need to consult with a financial advisor.
Excellent. Okay, let's get into it. So I just teed it up there for our discussion, but basically, if you've been reading news headlines on CNBC or Wall Street Journal or any of these media outlets, you'll see that topics such as the China tariff war, a trade war, in the inverted yield curve, the drop in the stock price, etc. These things are all flying in, and as you're reading them, I struggle with this. It kind of scares me. I have position in the market. What does that mean for me? What does that mean for my position? What does that mean for my investment? What does it mean generally for the next 2-3 years? And how should I prepare for it? And how should I act in this sort of environment? And so, we wanted to talk to you guys about that. So Hari, what would you say? How would you describe current environment, and how do you foresee? How do you see yourself? How do you prepare your mind? How do you arm your mental state to deal with this situation?
So I think, one of the things that we have emphasized since the very beginning of this podcast is, investing is, we like to think like business owners, right? And so when we buy stocks, we're not buying pieces of paper or things that show up in our brokerage account. We're actually buying a stake in a business. And, even though our stake may be very small relative to the overall size of the business, we want to think like an owner of a business, right? And so an owner is not going to be thinking about, what is the stock price? What happens if the stock price drops? They're going to be thinking about, how do I maximize my, free cash flow? How do I maximize my profit? How do I increase revenue? Those kind of things, right? And if we think like that, what that will end up doing is thinking, okay, in a bad environment, in a bad environment, businesses will, maybe their revenue will shrink because there aren't as many people and so on. But no, depression or, recession lasts forever, right? They always recover. And, the businesses that survive that are the ones that are the strongest, right? And that is why when we do our investment, and why we've been spending, 70 episodes kind of educating you on the, the basic concepts of a moat. How do you protect your business in a, the investment? Well, you protect it by buying a great business, right? A great business has a moat. It will protect you from, downturns and things like that, because eventually these businesses every business will hit a rough patch. Every business will have some issue. But if the way that we solve this problem is by thinking about it from the long term, right? So we have a powerful thing on our side that the Wall Street in hedge funds do not, which is we don't have to show quarter to quarter earnings, portfolio growth. We don't have to make sure that we meet some annual targets, or else people will withdraw their funds from our accounts, right? That is the benefit of being an individual investor, and it's probably the most powerful thing about it, because we can invest and we can have arbitrage our investment basically over time, right? And that is, I can't emphasize this enough. This is so powerful that you can find a business that nobody seems to like, or is getting beat up, and you just put your money down, and 5 years from now you've made a ton of money and beaten everybody else in the stock market. And so the way that we always want to think about it is, how does anything that is, that we're talking about, whether it's trade war, whether it's bond yields, whether it's low interest rates, how does that affect the business that we're actually operating in? In the vast majority of cases, not every business is affected by all of the things that are being talked about, right? And so, if your business is not even based in the U.S. or has a significant operations outside of the U.S., well, a trade war between China and the U.S. doesn't have an impact on you, right? And so these are the things that you have to start thinking. And that's why we analyze the business. We understand the entire scope of the business, and then we use that to make our investment decision. And so, as we've learned from, and we've talked about Mr. Market, and Benjamin Graham wrote this in The Intelligent Investor. Mr. Market is there to give you an opportunity. He will tell you a price, and you have the ability to say no, you have the ability to say yes, or you have the ability to do nothing, right? And so, you can have a you can buy, you can sell based on those opportunities. But what those decisions should be made on is not your emotions. It should be based on your analysis. And I think that is why this is such a critical topic, is that every one of us is human, right? We are all afraid when the stock price goes down. What did I miss? What changed? Am I going to lose all my money? Am I an idiot and made a stupid decision, right? So that emotion is always going to be present. You are not going to make it go away, right? Fear is always something that's going to be part of the human, psyche. What you have to do to combat it, though, is not be fearful, but to go back and reanalyze your perspective and look at what you did. So the way that you combat your emotions actually starts well before the emotion ever is present, right? And that is by keeping
That's a really good point.
Keeping track of all of your notes, keeping track of everything. So, one thing I've told Becco from day one is I have a journal, a little moleskin book. I keep track of that. Every investment that I have, I write down all of my notes in that one book, and then I have one page dedicated to my investment thesis. And so my investment thesis will be, I like this company because I think it has a good moat, and I state my reasons why. And then I think that in 5 years, this is what, it'll be able to maintain its moat, and the reasons why. And then my valuation, and then I update the valuation and the moat if necessary. Every quarter or every year, depending on, what the business is. And then I always look at that, when I try to make my decision making, whether to sell some shares or to buy, and it's not infallible. I'm not going to say that it is, but it does help eliminate some of the emotional aspects of this. The stock price went down. What did I miss? And am I doing something wrong here? Because obviously, if you sell in that scenario, you're not going to make money, right? If the stock price went down. So it really comes back to using your thoughts appropriately to, using your investment thesis to make to guide your decision making.
Yeah. One thing that you pointed out there, which I think is really insightful, is the fact that the de-risking, the controlling your emotions happens way before the emotion actually kicks in. The fact that you're doing all this work, due diligence, way before the stock market crashes, that the fact that you're doing this continuously really is how you control your emotions. And I think that's a really important thing to highlight.
Yeah. And I think it is. And, one thing that we're actually going to talk about here is how everybody else does it. You know, the Wall Street and hedge funds and things like that. They try to quote unquote control their emotions by, you know, using different investment strategies and stuff like that. And why? And you know, if you're somebody who reads about, you know, a company and you made your thesis and then you start looking at Seeking Alpha or one of these other websites, or you read Barron's, you know, or the Wall Street Journal, and they provide investment thesis for, you know, a company or something like that. You know, the way that they kind of hedge their bets or try to control their emotion, we want to talk to you about why those things are actually not the appropriate way to do anything, and why you'll actually lose money by doing so. And actually hurt yourself by doing so. So, you know, I think, you know, we should kind of, you know, we'll talk about how everyone else does it first, and then we'll talk about how we do it. And I don't know that we're, you know, Becco and I are, you know, the experts in this, you know, space. I've been doing this for a long time, and I still make mistakes. But, you know, so let's, I guess, you know, we'll start with the Wall Street, you know, way of doing things.
Sure, that sounds good. Should we talk about it in the next episode?
Yeah, we can. We'll start there with, you know, this one will be pretty short, and then we'll have a little more time on for that in the next one.
Okay, sounds good. All right, guys. We'll see you on the next one. Thank you.
Thanks.